Good morning. I'm Andy Myers at Weiss Research.
I'm Jen Amos, and this is your morning market alert for Thursday, September 8th. U.S. stock futures are holding steady after the market broke a three-session losing streak yesterday. The Dow Industrials rose 276 points, while the NASDAQ and S&P 500 both jumped about 3%. That rally was sparked by a German court ruling that the country could take part in rescue plans for its European neighbors. Investors remain focused overseas this morning after both the Bank of England and the European Central Bank left their monetary policies unchanged as expected. In the past couple months, the ECB has laid the groundwork for further interest rate hikes later this year. But given the deteriorating economic conditions in the Eurozone, experts now believe the central bank will signal an end to the cycle of rate hikes. ECB President Jean-Claude Trichet is speaking to reporters right now, and we'll tell you about his comments when we return after the opening bell.
In addition to that news on monetary policy, investors are also digesting the latest data on the U.S. economy. The weekly reading on initial jobless claims are out, along with the July U.S. trade deficit. We'll bring you all those numbers after the bell. Traders will also get a closer look at economic conditions when Federal Reserve Chairman Ben Bernanke speaks in Minnesota at 1:30 p.m. Eastern Time. He's expected to lay out what the Fed can do to revive the economy ahead of its two-day meeting later this month. But the biggest news of the day may come long after the closing bell, when President Obama speaks to a joint session of Congress. He's likely to propose injecting $300 billion into the economy through a combination of tax cuts, infrastructure spending, and aid to state and local governments. The centerpiece of the new plan may be an extension of the payroll tax cut that's set to expire at the end of the year. But the president may also extend the tax break to employers as well.
Ahead of the speech, traders seem a bit apprehensive. After a day of gorging on risk assets, such as stocks and most commodities, they're back to favoring assets viewed as relatively safe. Gold is jumping back above $1,850 an ounce, after dropping back near the $1,800 mark yesterday. Another reason for gold's strength today is a report from UBS, raising its forecast for the precious metal to $2,075 an ounce by next year. Meanwhile, Treasury prices are rising again as well, pushing the yield on the benchmark 10-year note back down to 2%. The dollar is modestly higher against most of its major rivals in the currency market, and crude oil is holding steady above $89 a barrel.
On the corporate front, we do have a couple stock movers to tell you about. Smithfield Foods is jumping 5% ahead of the bell, after it reported a 7.6% increase in fiscal first quarter profit. The company said the full year is shaping up to be another good one, and Smithfield forecast especially strong growth for its pork products. And finally, keep an eye on shares of Verifone today. The business equipment maker is gaining 3% after Standard & Poor's said it will include the stock in the S&P Mid-Cap 400 Index beginning next week. Verifone will replace Timberland, which is close to being acquired by VF Corp. That's the latest from Weiss Research. We'll be back after the opening bell with the market reaction to the day's economic news, as well as the latest from the European Central Bank.